And we are live. Welcome back to another episode of Layer1Live. Everyone that has been following us, up to this point, we sincerely appreciate you guys. Ton of news this week. We actually had to cut out a bunch of news, but we're gonna try to get it all to you guys. So, hello again to everyone in the chat currently. Those of you that are filling in, how you guys doing this week, Mike and Dima?
Doing pretty good. I managed to almost start the recording as soon as we started, so that's good. That's a win for me. If we're only missing like 10 seconds instead of 10 minutes on here, you can obviously catch us as hopefully you are right now live on YouTube. But for those of you listening on the podcasts,
do you
got you here too.
Do you guys have the mics? The audio coming through your mic? It sounds like you have it coming through your computer.
Yes, we do.
Boom. How's that?
There you go. That's much louder. Okay.
Super wrecked. We're just getting wrecked on this Monday.
Yeah.
That's how we're doing. We're getting wrecked.
Well, good to see everybody in the chat. Again, we're constantly trying to improve these Layer1Lives, audio and video and news that we're bringing you. So, a ton of stuff. I do want to get to the team news that we have. Obviously, we're running that $250 Bitcoin giveaway. It's been getting a lot of love on Twitter. If you guys haven't checked that out, go to our Twitter at Layer1Pod. You can see the rules there. It's kind of a holiday giveaway. And then we have added Scott Harris Firestone. So, Scott, congratulations on being added to that pool for that $250 Bitcoin giveaway. Again, these are for the most active members in our community. So there is a Twitter giveaway that's like $25, but the main pot, the gold, essentially, the digital gold at the end of the rainbow is going to be for the most active, and Scott was the most active this week. Barry, you killed it too, but you can only be added in once. Or else you just take the whole pool. But we got some other things. Guys, did you have anything else on the team news before I touched on like countries and cities and things like that?
I don't think so, other than to just kind of, do the classic kind of tease, right? So on the, we didn't talk about this pre-podcast, but, typically with Sutler Ventures, the brand and business behind Layer 1, we run a node on the IOST blockchain. Well, we're expanding. We've been kind of looking at expanding. We're in that process now. So stay tuned as to what new projects we are looking at, basically.
Oh, what a teaser.
What a teaser, man. A little Christmas teaser.
Yeah.
That's perfect, man. That's perfect. Guys are filling in the chat. They're saying, hey. So Sunil, hey. Barry, hey. D. Steezy, he says, yo. So welcome, D. Steezy. And Sunil is asking, what do we have to do to be on the list? Sunil, basically, the most active community member within Layer 1 is going to be added to a pool, essentially. We pick one each week, and then I believe January 6th or 7th, we're going to pick from that pool about who's going to win. So, share it on Twitter. Show us that you're sharing Layer 1 and comments like you're doing just now. That's how you get on the list, big dog.
Yeah, basically over the next, 6.5, 7 days, the number 3 winner will be chosen. Again, you can't win more than one. So Barry, Scott, you guys are in. It's official. But yeah, Sunil, share it on Twitter, comment on Twitter, subscribe, all that fun stuff.
Awesome. Okay, so I got the cities run through. Cities, countries, top 3 episodes. So we'll start with the top 3 episodes. We had the Tezos episode with Douglas Horn. That's number 1 overall. Staked on how to effectively compound your crypto as 2, and then securing your digital assets and data with Paul Pue from Edge. Those are the top 3 episodes this week, so appreciate the views. Go check those out. Top 5 countries. There was a bit of a swap this week. UK swapped with Australia, so it's going to be USA first, UK second, Australia third, and then there was a swap as well at 4 and 5. So Canada's 4 and Germany's 5 this week. So we appreciate all the people coming in from those areas. And then stats, we've got Feltham, United Kingdom, Arlington, Virginia, and San Francisco, California. And then following up with Toronto, Canada. So those are shout out to everybody living in those areas. And then lastly, we have the upcoming guests. We've got Brian Kerr from Kava Labs. We have Alex Wern from IDEX, as well as, in addition, Malcolm Cassell from Wax. So we have those 3 guests coming up this month. We appreciate you guys kind of reaching out and making Wax happen, man. You guys wanted Wax. Yeah. We made it happen.
Yeah, shout out to Barry. I mean, Barry got it done. If he could win another week, he definitely would on that contest. Thanks again, Barry, for that. Wax is a project that we've been following for some time. It's at an interesting stage, so I'm definitely excited to talk to those folks over at Wax.
Yeah, absolutely. By the way, shout out to the people in Australia that watch us, man. It's 5 a.m. over there, so seeing us in the morning.
True, we got them starting their day, so yeah, absolutely. Well, that's pretty much it for the team in house cleaning, as we like to call it. But we've got a lot of news. We've got a lot of breaking news that just happened, but we'll touch on that in a second. But let's get the breaking news as we had it in the dashboard.
Yeah, let's kick this off with France to launch a digital currency. So we keep coming back to all this like rhetoric from like different governments, right? Saying, hey, they're working on digital currency, like China, Russia, and others, trying to like explore like how to do this. But France came out aggressively and said, hey, man, we're gonna start experimenting right now, and we're looking to like have this done like first quarter of 2020.
Wow.
Whereas like, other countries, they're like kind of, still exploring and development. They haven't really given like a solid kind of roadmap where they looking to have this done. Meanwhile, France came out like aggressively, like, hey, yeah, we're doing this right now. They're calling on a bunch of different networks, companies to come together to them to basically do consulting, right? To help them choose like the right way to create their digital currency. But one main thing that like kind of I thought of right away is that, not to get too much into politics, but like right now, US and France are not really that good. There's like Trump, trying to aggressively go with, potential trade, wars with France, where he's trying to like put like tariffs on cheese and wine, So like things are not really doing that well, between the two countries. And it's interesting because like you see that repeating in other countries, right? So we see like, once these trade talks like break down or something, there's tension between two countries. They're like, well, you know what, cryptocurrency, let's go. Like
yeah, it's hilarious. It's hilarious, man, because I don't know when it was, at least 6 months ago, right? Like Venezuela was actually the first country to do it. Yeah, they came out with that Petro coin. Yeah, that was backed by their oil, and everybody was like, "This is a terrible idea. Why would anyone ever do this?" Yeah. And now it's just like this tsunami out in the distance that is supposedly coming. Where it feels like every week we have a new country just kind of pushing this forward. And the article on newsbtc.com has some great quotes there that obviously Pomp, right? He's super bullish on this stuff and kind of the digitization of currencies and assets and everything. And his prediction was basically that at some point every country will have this set up. And I don't know, man. I mean, Q, I'll pose a question to you on this topic, right? At what point, if ever, do you see the U.S. Kind of falling in line with this, understanding that the U.S. dollar in its current form, is kind of the world reserve currency? Yeah,
a lot of what the other countries are doing, I think, is in response to this U.S. dollar. So I think it's going to take the U.S. a long time. I think the actual kind of Trojan horse here is that Libra token, and I think that's the reason a lot of these countries are preemptively saying, hey, we're going to start our own digital currency, because if they don't, Libra can come in if it does get passed and try to. I think all of these are basically ways to prevent Libra from taking hold in their own country. So I would say the U.S. is going to be years behind in that sense. Not to say that that's something that we even need at this point, but it could rear its ugly head here in like 5 years if we're super behind on the tech. There was an interesting point in this article that says thresholds on the amount of anonymous transactions, as is already done in France for payments in electronic money or cash, could be introduced for this purpose. So I think the big point about digital cash in a country's governmental system is, are we going to be able to transact anonymously? And what do you think about that?
That's exactly what I read there too. That main piece where it says like, they're not looking to promote that anonymity, which is, understandable, because, we've talked about it on the last podcast, right? So it's like, there should be a certain extent of anonymity where, like like in China right now, you have like WeChat, and you have consistently government looking at your spending. They can track you, a lot of information there. That's way too much, control. But there's got to be a balance between anonymity and actually like having full, like, just in a way where you hide the two parties that are transacting if they can put endanger the society.
And like you said, we talked about this on the I think it was the last Layer1Live about the Cipher Trace report that came out. If you haven't read it, it's basically the report from Q3. It's CIPHER Trace, so ciphertrace.com or .org. Do it a Google search if you're really interested in this privacy stuff. But there is a kind of a bunch of momentum coming to a head here around privacy, where you have a lot of these privacy coins who are obviously focused on privacy, and now are, to your point, Q, kind of looking at introducing a setup where users can, when they want to voluntarily say that their private transactions were not sent to certain individuals or were not in certain amounts or were in certain amounts, right? So it is, I think it's kind of a positive from France, right? I mean, France has over the last few years had a ton of issues with protests, and obviously those have to do more with taxes. But I think hopefully governments are coming around to the idea that there should be a benefit to the overall launch of these digital currencies, central bank or otherwise, in having some sort of privacy feature, where you could kind of turn that on, turn that off. Again, to your point, team, the question is always, well, who actually has the control to turn it on and off, right? And that is what, time will kind of show us. But yeah, it's a wild world, man. I can't help but think there's going to be 1 month where this just all flows and happens, and there's,
massive ICOs,
country ICOs. Yeah, let's not go there.
I definitely wasn't going there.
Okay. You could kind of claim that the petrodollar was a form of that. I think Venezuela was trying to raise funds through, this selling of their, tokenizing their oil reserves. But anyways, we got the next topic, and the one after that kind of touches on this, but I'll let you touch on our friend Jack here from Twitter.
Yeah, other than the MakerDAO exploit, which we'll touch on briefly at the end of these breaking news segments. So we get two more kind of on the digital currency or cryptocurrency in specific countries, niche, if you will, here. So Jack Dorsey, CEO, founder of Twitter, has been obviously super bullish on cryptocurrency this past year, has, gone so far as to say that he's buying $10,000 worth of Bitcoin every week. Well, now he's pushing Africa, right, which many have pushed before, as basically kind of certainly a new area of growth for the global economy and tech and fintech specifically. But he's shouting from the rooftops basically that Bitcoin in Africa is going to be gigantic. It's interesting kind of going a little cross industry here, right? The first thing that came to mind whenever I saw this article and kind of the how bullish Jack Dorsey was on Africa was an interview that I heard with a UFC fighter. A guy by the name of Israel Adesanya, right? Who is he's the
last airbender.
Yeah, last airbender. He's from Stylebender. Yeah, he's from Nigeria, right? There's some other UFC fighters from Nigeria, and essentially what he said in this interview was that no one is really ready for kind of this like level of drive and enthusiasm and intelligence that countries like Nigeria, in Africa, pose for the global economy. And I think that as things continue to develop with Africa, especially around cryptocurrency, we might see a similar phenomenon where, as we saw with China and kind of this giant, growth over the last 10, 20, 30 years with China, we might see with Africa as well, where okay, the US is very comfortable, everybody's working their 7, 8, 9 hour days. Okay, maybe China gets to that mold a little bit, and then Africa is trying to, move from that kind of third world or second world country to first world country, and you just see this massive flow of entrepreneurship and growth, and cryptocurrency might be right in the middle of it.
Right.
Yeah, I don't think it's necessarily like unique to crypto in the sense that it's tech broadly, right? Like you have a whole vast continent of people who are frankly unbanked, to say one. And then they definitely don't have desktop computers. They're not heavy on tech at this moment, but like it's saying in this article, 4 of the fastest growing economies in the world are in Africa. So Cote d'Ivoire, Ethiopia, Ghana, and Rwanda. And only 400 million of Africa's 1.25 billion people are using the internet. So
Wow.
it kind of, I know Jack's doing this out of the goodness of, of his thought process, and I don't want to say his heart because I'm not speaking in that way, but it does make sense for someone who's running one of the biggest social media platforms in the entire world to say, hey, there's a ton of people here who aren't even using the internet yet. They are going to soon, so let me get in front of this. But I know Jack probably, has more of a good intent there because he's shown to be that way. But yeah, man, that's a super interesting topic.
Yeah, definitely. I mean, as we'll see kind of in this next point on China and some additional news with the central bank and some cities, it's all, like I said in the previous breaking news piece, it all seems to be happening kind of together at the same time. So what's new in China now, Q?
Yeah, so the title here is going to be China Central Bank likely to pilot digital currency in cities of Shenzhen and Suzhou. And basically what this is saying is that the government's going to work with 4 big banks, so I can name them off here. Big 4 commercial banks, the Industrial and Commercial Bank of China, Bank of China, China Construction Bank, and the Agricultural Bank of China. So this is 4 of the biggest banks in China, as well as 3 of the biggest telecommunications networks in China, and they're going to do it in these 2 cities as kind of a test run, and basically they're going to launch a digital yuan in these 2 cities alone as kind of a test run. So that's basically that part of the news. What do you guys think about this digital currency electronic payment? They've turned it DCEP
Right.
Yeah, go ahead.
Yeah, no, I mean, this is just basically, if you've been following Layer1Live or the podcast in general, this is just another step towards China launching this DCEP, digital currency. So they're gonna test it in these 2 cities. The article essentially goes on to say that as long as there are no glaring issues, they're gonna look to launch it broadly across the country.
I think how we had the arms race. Now we have this cryptocurrency race.
I like that.
So I think that's definitely shown right now. Relating to France news, with China, how aggressive they're moving in. Like a bunch of countries are doing this as like the global politics situation is heating up, and everybody's racking up ridiculous debt. The banks are struggling. Like all these things are just like everybody wants to hedge away from like fiat. If the government's trying to hedge away from fiat, bro, there's something wrong.
Major red.
Yeah.
So one of the things in this article that I wanted to touch on, because it made its way into one sentence or 2 that I pointed out in the France article, is they talked about anonymity in this one as well. So near the end of the article, it says the report cites the PBOC, People's Bank of China, official as having said that the digital currency is designed to replace physical cash in circulation and will meet, quote unquote, the needs of portability and anonymity. So it seems it'll be interesting to see how each of these, digital currencies are handled differently within each country. I can't, for the life of me, think that China's actually going to be thinking about the needs of anonymity for their for their residents, at least.
It's a bet. China. I mean, when we talk about anonymity in these digital currencies, China's really not a good example. Because it's. What we hear and what we see and kind of what our perspective is going to be very different from what is actually happening and what is obviously the perspective happening there. But, just to kind of skip along here, before we talk about this breaking MakerDAO exploit, which is a big one, I want to skip down here because there's some other China news that goes along with this topic and the way that they're using blockchain. So again, if this is kind of the first information you're hearing about China and crypto or China and digital assets, right? China and blockchain. Essentially, the president of China, Xi Jinping, or the chairman of People's Republic of China, whatever you want to call it. I can never remember. The king, King Xi, right?
Yeah.
He came out, and it wasn't the first time, but it was the most kind of public and influential speech around this that he had, and basically said China will be the leader in blockchain. We have to be the leader in blockchain. We're doing that in 5G. It has to be in blockchain. So obviously we see that with the DCEP, but other things are happening as well surrounding trade, right? And financing. You can kind of see how maybe China and France might be working together on some of these digital assets here. But essentially, around testing, China has issued $2.8 billion worth of bonds on the blockchain to small businesses. Essentially in China right now, there's kind of a lot of issues with what the Chinese will call the shadow banking system, where there are literal trillions of dollars worth of what are generally very risky loans that exist between peer-to-peer consumers and especially small and medium-sized businesses.
They have that here as well.
They have that
to a certain extent. But
essentially, like, my point is that when you're trying to grow as quickly as China is, right, and you're leveraging so much debt to do this, when you have a system that you as the government and the state of China can't control, like the shadow banking system, it adds in so much more existential risk, right? So I think in this article on CoinDesk talking about these new bonds that are going out for small businesses, I mean, it's very clear that China has much more intent past just the DCEP to use the blockchain, right? They want to use the traceability of the blockchain to ensure that they can control all of those loans, right? Make sure that nobody is, issuing loans to those who they shouldn't be, or doing it with, sketchy interest rates. And, there's some other information that kind of goes along with the article about Huobi looking to launch their own blockchain. In case you missed it, on November 12th, Ant Financial, the company behind Alibaba, had said that they were looking to launch their own blockchain. So, China is certainly, France is trying to move fast, but it appears China is definitely moving the quickest. So, we were talking about China. I just wanted to hit on some other points there that came out in the news. A lot of discussion around China right now.
I wanted to add to the bond sales that they had. So they issued over 2 billion in bonds at an interest rate that's actually like 3.25 or something like that.
3.25. Yep.
Yeah, 3.25. So if you take a look, and it's a 2-year bond. So also, if you take a look at the interest rate that is set by Central Bank of China, it's actually higher than that. It's 4 something percent. So they're actually subsidizing it to incentivize people to take on these bonds while the market interest rate is higher than that. So it's an important thing to kind of point out as well as I was doing my investigation.
Yeah, China's just a continuous narrative, man, and I think it's important for Western businesses and people who are involved in crypto to have legitimate connections with those that are over in China, because it helps you disperse or it helps you get through essentially all of the information that might be just fluff, right? Like what is actually happening? I know that they've said they've are about to launch this currency in these 2 cities, but is this actually happening? They've said that they're going to ban crypto, but is this actually happening? They're adopting blockchain, but is it actually? So basically, I think it's going to be a continuous narrative. It's important to find people who are either live there in the East, or constantly travel there, to make sure that you're not just taking in maybe Western propaganda, for the lack of a better term, on Chinese and crypto.
Yeah, for sure. And it's while China's been a huge narrative, I mean, China has always been a huge narrative in crypto, whether it's FUD or true. To your point, things are happening in the US too, right? We saw some interesting news from State Street, which is essentially one of the largest financial kind of institutions within the US, right? They're on par with Vanguard, BNY Mellon, a lot of these kind of larger institutions, asset managers, whatever you want to call them. There was an interesting article also on CoinDesk talking about this kind of quote unquote massive demand that State Street is seeing for what they call digital assets, right? Various cryptocurrencies. And the reason I highlighted this and kind of looking through some news, this came out on the 6th, right? So this past weekend, is because this is also I think an emerging narrative within the US, in that State Street is one larger institution who has been traditionally very blockchain focused, right? They have said, we want to use the blockchain in any possible way we can. It's going to reduce, costs across our institution. We want to develop solutions for other institutions that will reduce those costs. And as of late, they've basically shelved that idea, right? They've laid off upwards of 100 different blockchain developers, and now seem to be moving towards the actual kind of buying and selling of cryptocurrencies, of digital assets, which is a huge shift, right? They are basically saying that the private distributed ledger technology, private blockchains are not showing the expected growth or the expected, say, results that they had previously invested in. So here comes this giant shift. In this article on CoinDesk, they talked about a survey where I think what was the total?
Yeah, so the sample was based on 101 primary US based asset managers and owners. So basically 101 of their clients, institutional clients that they sampled. And it's interesting what they said, that 62% of clients said the tokenization will improve risk management for them. And then 55% said it will enhance security. That's why they like that product. And only 36 said that it helps with liquidity.
So when you say that obviously like private blockchains aren't getting the adoption that they had once hoped, what does that mean in total? Does that mean that these institutions are going to be leaning on more public blockchains than we initially thought?
Well, I think whenever the whole push around what I'll call the institutionalization of crypto came out, everybody assumed that this basically just meant that your mom, your dad, your grandma, everybody's pension fund IRA was going to start buying Bitcoin, right? And then that was kind of quashed with this whole narrative around, we don't really know about cryptocurrencies. It's super volatile. It's full of scams and all this. So we're going to focus just on the underlying technology, right? In the same way that back in the times of the internet, people said, the internet's kind of scary. Right. There's a lot of scammers there, but TCP/IP is going to be huge, right? We're going to create our own private intranet and intranet, right? Not internet. We're going to create our own private intranet that's going to revolutionize the way we do business. And as we saw over a short period of time in the whole scope of things, that changed very quickly as overall demand for the internet continued to grow. And I think we're seeing something similar here with State Street. I mean, in this additional survey, they basically said that 94% of their clients already hold digital assets. And that's something like, 38% of them said they will increase their allocation of digital assets in 2020, right?
Goodness gracious.
There's over a third of people, if you do the math, you see what I did there. Over a third are planning on increasing their allocation of digital assets, which, we saw the Bitcoin price this year. I believe it was lower than what we're at now. We saw it all the way to 14K, and now we're hanging around 7,500. So, see that over a third will increase is pretty significant, even if the survey is only 101, different asset managers. So it's just, it's not really breaking news. It's nothing that I think impacts the market in some way in the short term, but I think it's an important narrative in the US to follow. If we see others like a State Street who are basically saying, the technology is great, but look at all this business we can be doing because everybody wants to buy Bitcoin, everybody wants to buy ETH, yada yada yada.
That's the primary use case of crypto right now that we've seen, right? Speculation. So that makes complete sense. I do want to point out that we reached, I believe, 22 concurrent viewers at one time. So that's the highest up to this point on Layer1Live. So thanks everybody that's in the chat. Please like the video. Please subscribe to the channel if you haven't already. It definitely helps, us continue to push these out. If they're getting pushed live, we get more viewers, help us continue to do this and bring it to you. So thank you everyone that's been following up to this point. We've had some comments. Scott's in the chat now. So what's going on, Scott? We've got Barry talking about Five Eyes, I believe he said 5 Eyes, 9 Eyes, 14 Eyes, which is basically the, I guess, evolution of state-sponsored surveillance, and how there was really 5 countries and now it's up to 14. But I don't think we have time to get into that. Yeah, Scott, you made the list, man. And then also Sunil's in the chat, Rivers in the chat, Rupesh. Ashar, hi. So we appreciate everybody here, but we've got a huge piece of breaking news, so we're not going to be able to cover it in depth because it literally just broke. We didn't even have it on the dashboard before we went live up until like 2 minutes before, but MakerDAO, apparently some blogger, some white hat blogger says that there is a pretty much a catastrophic MakerDAO exploit where it can be, I believe it's, so I'm assuming this is like a 51% attack, where if you have a certain amount of funds, you can attack the network. He brought it to MakerDAO, the MakerDAO Foundation, he brought it up to them, and they pretty much gave him a bunch of different defenses against his argument that we can get into in a second. But for you guys, what actually went down with this MakerDAO exploit, and what do we think?
Yeah, I mean, it's scary, right? Take a look at the Medium post. It's 100% worth the read. It's only like a 9-minute read, whether you're into DeFi or not. This has always been the concern with decentralized finance, right? Is that there's going to be some major exploit. Years ago, we saw the same thing with the DAO hack on Ethereum. But basically what this guy, Micah, is saying is that with only $20 million worth of Maker, you can go through and use their voting contract system, essentially. And I know that's not what it's called, but it's essentially this contract setup, this kind of executive setup that with enough Maker, you can do whatever you want on the system. And the system, if this happens, is supposed to go into what's called like an emergency shutdown mode, right? Where there's some bad actor, the system goes into emergency shutdown and initiates some period of time.
It's a seatbelt.
Yeah, it's a seatbelt, right? That initiates this period of time that allows the good actors on Maker to basically say, okay, what's going on? Are we being attacked? We're not. Okay, good to go. Or we are. Okay, well, let's, not let this happen, or initiate other things that won't allow this to happen. But as he was reviewing this guy basically saw that the seatbelt they put in place, the time that they put in place for this kind of, review to happen is 0 seconds. So he was like, well, okay, so if I do the math here, right, with I believe the first number was $40 million worth of Maker, which for us is obviously a ton of money, but for, large black hat hackers is not that much, right? I mean, we saw and talked about last week how North Korea has stolen billions and dollars worth of crypto. So basically with $40 million, or if you can time kind of the overall process correctly, you would only need $20 million to go through and initiate yourself as the kind of the executive under the system, if you will, and institute whatever you want, which in this case, the most profitable thing to do would be to pull all of the collateral for yourself. Yeah. Right. So the article is basically saying, how to turn $20 million into $340 million, i.e. the collateral in Maker in 15 seconds.
Wait, there's a step-by-step there?
Yeah.
Well,
I mean, there kind of is a step-by-step.
He laid out a step-by-step. The first question I was raised, why didn't he go to the Maker Foundation? To which he did go to the Maker Foundation, and they gave these defense, answers to him. So he said, he laid out, and he paraphrased probably 4 or 5. So the first, the attack vector has existed for quite a while, but things are fine. 2, it is too expensive for anyone but a select few people to execute. 3, an attacker would have to telegraph their attack. We would take legal action against any attacker. It is hard to be anonymous on Ethereum. It is a known risk, but there are unknown risks that may be worse. So these are all the responses that the Maker Foundation had. I wonder, now that this has been brought to light, whether they will attack it in a certain, or at least bring, kind of answer these questions that are going to eventually come from the community.
Yeah, impose some sort of resolution. I mean, it's not Maker's kind of had a tough year. I mean, certainly they've had more and more assets come in, and we've seen that happen on ETH and kind of DeFi overall. But if you remember earlier in the year, there was a lot of kind of confusion and heartache around the kind of interest rates essentially that were being imposed that are used to try to keep the DAI price,
right,
at $1. I think we saw it drop as low as like 86 or 87 cents to the dollar. So it's I don't know what's going to happen. Like we said, it just came out, so I'm sure on crypto Twitter or news sites we'll see a lot of various kind of thoughts and stances come up. But I mean, at the end of the day, props to Micah. I mean, clearly he's somebody who sees the issue, right, and says, well, if you guys aren't going to do anything about it,
I'm just going to make it public.
I'm going to make it public, so that other people can take a look.
Yeah, absolutely. Go ahead, Dima.
And also at the end of the day, this is an experiment, right? So it's like when you run an experiment, you're trying to fix all these things and also add more features like multi-asset collaterals and so on, right? You're bound to have some issues, like that can happen. So
yeah, I just, as the final point here, Q, let me pitch this over to you. I don't know if you're into DeFi or CeFi or anything, but to me, like the risk versus reward, especially considering the fact that you have to, in many cases, over collateralize by 200, 300, 400% on these platforms. I don't see why any normal user or even a sophisticated user would use DeFi. Like it's never clicked with me. It just feels like, hey, yeah, down the road, this could be a great setup. But right now you're kind of first through the door.
Yeah, no, absolutely. And I sorry, Q.
Mine was going to be very unintelligent. People are chasing the highest returns, so they're looking to be in their digital asset of Ethereum and still have returns based on the staking or what have you, and collateralizing their ETH so they can hold this ETH and also make money on other digital assets. I think they're just chasing APR. But go ahead.
Yeah, no, for sure. And also, like the thing is, for me, it will mature once we have less volatility in crypto and more liquidity. Those are the two main things that you need for collateral to go down. Otherwise, these guys are trying to protect against the volatility and the liquidity that's available right now in the market with this stuff. So
yeah, I struggle to understand or to trust a system like this, versus a Celsius or a BlockFi, right, who, they're centralized, but you can borrow for a lot less from a collateral standpoint. You can trust that hopefully there is some sort of insurance there, or maybe there will be in the future. We talked about that before. So be careful out there, guys. Right? As trusted as DeFi on Ethereum has become, and as Maker has become, none of us are cryptographic experts, right? You gotta be careful out there.
Yeah, no, I completely agree, and I've got a lot of thoughts on that. I think adding DeFi to a feature that of assets you already own is something different than maybe an institutional investor coming in and being like, "Hey, I don't use crypto at all. Let me get involved in this DeFi situation where I can chase yield there." But I mean, we're 37 minutes in, and we need to get to these topics. I think there was a ton of breaking news. There was a couple that we didn't add, but that I'll add to the description, guys. If you come back after the videos, after we're done going live, I usually go through and timestamp each of these talks. So if you want to hear specifically about maybe EOS or specifically about Tezos or Bitcoin or the breaking news, I've always timestamped in the description where you can click on and then come back. But that's probably 30 minutes post video because I have to go through that. So if you are listening, that'll always be there. But we do have a BlockFi launches crypto trading platform that's pretty big, as well as Brave surpassing 10 million monthly active users. So maybe we'll get to those next week, or if we do a second episode per week, maybe we'll start doing that. So but let's get into the topics, man.
Yeah, let's hop into the next one. So we have Deutsche Bank, also known as a zombie bank. So these guys, obviously, if you haven't been really following, haven't been really having a good time. The Deutsche Bank lost essentially 90% of their stock value in 10 years. So for those bag holders that hold altcoins, they can relate to this. But the report here that's saying here is that basically they're struggling and they're seeing a risk in fiat. and they're seeing how fragile the fiat system is right now, the way it is, and they're looking for a hedge because they see a potential risk in some black swan event, basically. Right. So, and they said that they're considering in their next research, I think 24 alternative ideas for the next 10 years to basically recover from their 90% being down. So Deutsche Bank has a lot of problems, obviously, but they're talking about alternative investment ideas where essentially, it's having crypto in it. So having exposure to crypto as the hedge against the fragile fiat system that they see right now.
Yeah, which of course is ironic, as you said, coming from Deutsche Bank,
right?
Basically one of Germany's largest banks, who's been constantly at the risk for bankruptcy. But yeah, I mean, people high up, in the banking system they're not stupid, right? They see the inflation happening. There's hundreds of billions of dollars each month being pumped into the U.S. Financial system, and that can't go on forever, right? At some point, inflation starts to become a problem, and we've obviously seen a lot of fiat currencies have issues this year. So, yeah, I mean, and these banks, right, like many divisions, are looking for kind of long tail or black swan opportunities to make a ton of money.
Right.
So, if you as Deutsche Bank can kind of come out and say, hey, this is what we're looking at, there's not as much surprise maybe for, say, shareholders or some of their large clients when they do take some of those opportunities.
Yeah, absolutely. Yeah, as a hedge, it's funny because in black swan events, your hedge actually makes the most of the money. Like we've seen back in 2008 with Goldman Sachs, where their hedge was against the mortgage market in US,
which they were selling to their customers.
Right. Yeah, exactly. But yeah, so if Q, do you have anything?
No, guys. If you see me working over here on the side and you're on the video, it's because I'm kind of going through these different comments and different stuff that needs to be done. So no, you guys continue.
Yeah, no worries. If we got some good comments or thoughts at any point, just holler and stop us. It'll shout out Deutsche Bank for maybe pumping Bitcoin in the future here.
I know, right?
Anyway, on to so there's some SEC news, I guess, about a futures fund as well.
So yeah, interesting thing that happened was SEC approved BTC futures fund that can offer shares to investors now. So basically, it's a fund that can now sell shares, and they can actually share these shares. I don't know, I can't say it, but
sell these shares, right?
Yeah. With open market where you don't have to be necessarily institutional investor or accredited investor. So in the minimum, I think they have the minimum to invest is you can do it as low as 1,000. They're looking to raise 25 million initially, but it's pretty big because you have the futures trading platform for crypto that's getting SEC approval to do an ICO, basically, but in traditional finance, like you do buy shares. So that's a good sign for this fund. It's a New York Digital Investment Group LLC.
Interesting. Yeah. I mean, the futures market, we talked about it a lot before, continues to blow up, right? I think traditionally, and correct me if I'm wrong here, but it seems like traditionally most of the volume has just come from your retail or what I'll call sophisticated retail traders like ourselves who have moved from spot trading to futures trading. And that's why we've seen spot trading volumes decline and futures trading volumes increase. But now with, the SEC starting to play ball with a lot of these kind of hybrid funds, where essentially this is a fund that will trade BTC futures and offer shares, publicly, I would guess, to start with institutional investors, eventually, like you said, with more, with more kind of standard investors, which at the end of the day is just an additional access point for people to get their money into crypto, which when I read this article, and looking kind of at some thoughts on crypto Twitter, I think now we are more bullish on a Bitcoin ETF than we've ever been.
Yeah, yeah, for sure.
Wait, I feel like I've heard that from Mike multiple times.
And it's funny because as many have said, myself included, probably when we get a Bitcoin ETF, it won't matter much for for the market.
Yeah. By that time, it should be already you should be well sophisticated.
Yeah, and major asset managers, major institutions have said that. It's basically like, if you want, whether you're retail or institutional, the majority of those kind of classes of investors, if you want exposure to cryptocurrencies, you can get them.
Right.
I think the ETF really just speaks to kind of the ease of flow of capital, right? If you can have pension funds, if you can have IRAs investing in these ETFs, it just allows that institutional or just kind of broad market cash flow, easy access to crypto.
Right. Yeah, I think we still have some time to go for crypto in terms of developing that liquidity that I mentioned earlier for derivatives, and the infrastructure over there. I was talking to you about before the podcast about Syntex, synthetical products that are developed for crypto, where you can buy synthetic BTC, and it's not physical, and the benefit there is just that the exposure that you get, so you can just buy BTC without or other alts without going through all these hoops of depositing into your wallet and all those things.
Right.
It's geared towards just regular retail traders. But the problem there that was identified is that because of the APIs that they have for those synthetic products, the actual broker was not fast enough to catch the prices from their liquidity providers. So some traders,
right. So essentially, just to summarize, right, the traditional markets, traditional cryptocurrency markets, let's say price dumps by $100.
Yeah,
it takes too much time for synthetics or other synthetic platforms.
There's a slight delay there that can be identified. Now it's not all the time, but during volatility that we've seen now, because you can understand their API pings, right? And probably multiple sources. There's a limitation, and they've identified that the traders that they can see the market move here and then take a position on a synthetic on that $100 drop before it actually is priced in. So you get in front run.
So they're arbing it.
Yeah,
they're arbing it. Which, I mean, if it's only 10 seconds, obviously we're not doing that manually, right? Sophisticated investors are putting together algorithms that are able to do this.
But that's actually very frowned upon from the broker side, because they're losing money. They're getting chopped, right? Because the whole point for you offer these synthetics is that when you're buying the synthetic BTC, the broker sells it to you at that price, right? So you're chopping up the broker, really, because they don't have enough time to offset, because the market price is already chopped, right? So like,
do we get these insights on Dimitri's desk, or is it just charts, man? What's going on?
No, man. Of course, yeah.
All right. I'm just making sure. sure. So we had go ahead, Mike.
No, I was just in summary, right? I mean, I think basically what we're getting at is that as cryptocurrency in general grows to be a larger asset class that people are trading, whether it's State Street or your Deutsche Banks of the world, or it's various investors investing in a futures fund, there's going to be some growing pains to get that liquidity where it needs to be, to get that volatility down a bit. And I think broadly what we see in the traditional financial space moving to crypto is that these 10-second opportunities don't traditionally exist anymore in the traditional financial space. But they look at this and they're like, well, this is easy money. What the hell are we doing?
A lot of people from FX are merging over the same system, because I remember NFX used to be popular. As a matter of fact, with my company, we've had clients that did this and we had to slash them. You can't do that, man.
Right.
Awesome.
We got some comments?
No, we're pretty good. We've got some comments. Sunil said, because I'm asking you guys, hey, please, if you're in the comment section, throw out your comments, man. We love, talking about whatever you guys see that's on your mind, or you guys see in the markets or the industry that we haven't touched on here. Please drop those comments, man. It's awesome to hear from you. But let's move on to Ethereum here. we've got a huge news, kind of a stepping stone to what would be called Ethereum 2.0, right? We've got the Istanbul hard fork, which went live. I believe it went live yesterday. And there were no shortage of memes as we kind of ran up to the time frame where the hard fork needed to be pushed, or the block that needed to be implemented on. We didn't have a majority of the community that was ready to push this, so it was kind of like an Ethereum classic joke. There was kind of, but it ended up going live. The community got together and pushed this live. There's a ton to unpack here, but it looks like the majority of this update is to get it ready, to get Ethereum ready for that 2.0 push. There are some interoperability upgrades that come along with it, specifically as it relates to private transactions and its interoperability with Zcash specifically. There was some like DDoS resilience pushed in, as well as like a lowering of gas costs that had to go along with zero knowledge proofs like software like that you see on Zcash. So that was interesting. What did you guys see within this update here?
Yeah, I think the biggest concerns that people had were revolving around the parity client or whatnot. There was a large, or something like 15% of the network that had not successfully kind of prepped themselves for the upgrade. But yeah, it went through. To your point, it's a great step for Ethereum. Some of those jokes I saw were basically like, anytime ETH does a hard fork, short it. And this was one of the few times they've been able to go through with the hard fork and do it well. I mean, it's what you would call a non-contentious hard fork, meaning that everybody pretty much agrees that it needs to be done. All of the Ethereum improvement proposals are necessary, right? They're good additions. One thing I want to do real quick, because I had some information that was incorrect, is just kind of go through very briefly here what the next steps are for ETH 2.0. We've said before that it looked like 2020 we would see ETH 2.0. That can be confusing because we don't see the full implications of ETH 2.0 until 2021, right? So as you said, Q, Istanbul, kind of the first, non-contentious hard fork that goes into place to get ETH prepped and ready for some of the things that go into place next year. Traditionally, what they call phase 0, which is called the beacon chain, was supposed to happen in 2019. It looks like it'll be happening in the first quarter of next year now. But essentially, the beacon chain is the first step towards proof of stake. It's basically like a testnet chain that will run alongside the proof of work chain and allow, basically good actors, approved actors within Ethereum to test this new proof of stake setup. So it's kind of this testnet that goes live. There's no switch from proof of work to proof of stake fully, just basically a testnet. Past that, later in 2020, we start to see what are called shard chains. It's initialized. So shard chains have to do with sharding, obviously, which essentially sharding just splits the data processing responsibilities of a database, or in this case, the blockchain, up into shards, right? Up into kind of pieces of the blockchain, which allows for parallel processing and increased throughput and all this fun stuff. Sharding is still very much researched. ETH seems to be in the lead for implementing sharding of some kind, but that will come next, right? So essentially, the beacon chain comes out, it's tested. Next step, shard chains. The beacon chain will monitor the shard chains because they can be very unpredictable from a security standpoint. And that's kind of the big phase 1 for ETH 2.0. Phase 2 is what people call EWASM, which is essentially the new virtual machine for Ethereum. It's just Ethereum flavored WebAssembly, they're calling it. So it's their new virtual machine. This is, really specifically where these shard chains are going to evolve from pretty simple data, markers or markets or whatever you want to call them, to very much more functional transaction focused chains, right? So with the new virtual machine, it allows these shard chains to become basically much more of a solution to providing scalability for the Ethereum network, allowing the Ethereum network to scale overall. And that's expected 2020. I think we'll likely see it in 2021 based on when the Istanbul hard fork went live, and based on when it's likely that the beacon chain goes live. But the interesting point here is that past that, Ethereum doesn't have necessarily a hard date on when they expect the proof of work chain to kind of disappear. So they will call that Ethereum 1.x. The proof of work chain will still exist while the new proof of stake ETH 2.0 exists. There is what's called a difficulty bomb that was recently delayed, but should make the proof of work Ethereum chain, assuming everybody merges to the proof of stake, computationally, pointless, right? It won't be profitable.
Well, that difficulty bomb's moved multiple times, if I'm not mistaken. So they can continuously push that off to infinity, if I believe.
They could. I guess the question then would be why, if the proof of stake chain, if ETH 2.0 is out and that's launched, I feel like Ethereum is using the difficulty bomb to basically make it harder for the proof of work chain to survive as that second chain.
Vitalik's leaving behind that bomb for like for everyone that's going behind.
Exactly. And they're pushing it off because they don't want it to go into effect before the proof of stake chain is ready. Right. Then you have the proof of work chain, which is, full of all these difficulty issues, from a block production standpoint, and the proof of stake chain that's not fully ready. So it's a busy year for Vitalik and the crew. Obviously 2019 was. 2020 is going to be massive. Lots of, from a trading standpoint, potentially lots of opportunities if you're following along with ETH to either go short or go long as things go well or bad.
It's interesting because I was talking to Zach about like the last time ETH, had a fork, right? The price actually dropped a lot because they didn't go as well, which is interesting to see at this time. That doesn't seem to be like the case, right? Because we had that transition and everything seems to be relatively fine, because a lot of times from a trading perspective, what you want to do is you want to be buying on the hype and then selling it before the news come out, right? So because you don't know what the news are going to be or how it's going to go, right? So a lot of people are deleveraging, de-risking their positions ahead of a release. But it looks like we didn't really get that much on this one, relatively.
Yeah, it was fine. Price was pretty static.
Yeah, I mean, it's kind of moving sideways like we've seen on PTC.
Ethereum's like a super dev heavy community, so I feel like a lot of these updates come out, and those of us that aren't devs are like, what the actual hell is going on? And you could, if you take some time, you could obviously break that down if you have knowledge, but still, like, to this day, it's tough to break down everything. One question that I would ask with gas costs decreasing, does that increase, or I guess, does the gas cost decrease also make the network less secure? Because isn't that one of like the features of proof of work, in the sense that it costs so much to attack the network that wouldn't happen?
It's a good question. I'm not entirely sure. I mean, miners are receiving the transaction fees, so I think theoretically that makes sense. But
okay.
It's I can't say offhand now.
I got you. We need to bring a. Actually, I'm gonna have the guys from Matter Labs, because I sent that link to you guys in Telegram, but they came up with this I don't even know what I would call it at this point, but it says a scaling and privacy engine called ZK Sync. So they're talking about all these zero knowledge things, as well as, the Ethereum network. So I want to try my best to get Matter Labs on the episode so they could break it down. It's always better to hear from the guys themselves that are involved in the Ethereum network. But we do have some comments. Sunil says, talk about Huobi's US-based crypto trading platform ceasing operation. That's HBus. Barry's always in the chat with his little tinfoil hat on. He says interesting because the symbol X, when we were talking about Ethereum 1.x or what have you, because the symbol X is used regularly in government-sponsored black budgets. And D Steezy's in the chat. He says, "What up, though?" So what's up, D Steezy?
What up? What up?
Great to see you. But those are the comments up to this point. We've got interesting news from IDEX, huh?
Yeah, definitely. And just real quick, Sunil, yeah, HBus, shut down. I think they were closing out the Canadian operations as well. There's a lot of potential in Asia, obviously. The news surrounding Huobi has been them launching brand new offices in the Hainan region of China, which is, set to be kind of a cryptocurrency territory for China, if you will. But yeah, I don't think Huobi really is too concerned, certainly not as much as a Binance with U.S. customers. So, Binance has Binance U.S., Huobi has seemingly just kind of, cut off those operations. So anyway, IDEX, for those who don't know, has been to date the largest decentralized exchange on Ethereum. Decentralized exchanges make up a small portion of the total volume, across all exchanges, but IDEX has pretty much dominated the landscape there. At a time now when I would say decentralized exchanges have kind of fallen off the map, they seem to be really pushing ahead. They got a new demo out. We'll link it after the fact, but it looks nice, and they essentially in their new IDEX 2.0 setup are going to allow for what you would call centralized exchange components, right? Speed, really mainly speed, in kind of a hybrid decentralized exchange format. So I don't want to talk about it too much because we're going to hear from Alex Warren, the founder and CEO himself, here coming up, I think on the 17th, so next week. But it's exciting stuff from IDEX. I mean, you've got a lot of DeFi happening. They seem to be setting themselves up for, an interesting kind of launch into next year.
Right. Yeah, it's gonna be exciting to see the IDEX go. In just the overall dexes, where they are in their purpose in this market.
They're hanging on. Yeah.
So they're hanging. What makes IDEX better than a lot of these exchanges, and why have they become more popular over the past couple of years?
It's a good question. It's a great question for Alex. I mean, for me, it's hard to kind of narrow it down to a handful of things. I mean, Ether Delta struggled really after they got the kind of that big lawsuit or whatnot. I think it was from the CFTC or the SEC, and that kind of hurt them. Whereas IDEX has been able to really scale the team. I think they've done some fundraising in the past, and they offer a ton of different assets on the platform. The biggest problem with DEXs has basically been that they're too slow because so much of the actions that are carried out on the exchange have to be done on chain.
Right.
That, when Ethereum has issues with scalability, and then, to buy or sell, if that has to be done on chain, it's like, okay, well, how am I supposed to do this in any sort of kind of functional or logical way if I have to wait 5 minutes for, my buy or sell transaction to actually process and see the funds hit my account. So, I think broadly with IDEX, they see these issues. They see, say, the growth of futures. They see the growth of lending and borrowing with DeFi, and an interesting one to kind of watch and see how they grow.
I just remember the Syntax that I was talking about, right? Synthetics, yeah. So I think the name of the company is called Syntax.
Gotcha.
But basically, so those guys that offer synthetics, they also said they're going to be launching a futures DEX. Basically BitMEX, but decentralized.
BitMEX with 10 seconds slower.
Yeah, exactly. So, but and we've had we've seen that narrative from other places where they're saying we're going to launch this BitMEX is decentralized, but that's going to come back to the fact of people see these issues and they want to create a solution for it, a platform, but really I feel like they're front running this sophistication, where it's well, yeah, it's all possible, but it's not yet the time for DEXs maybe right this moment to be optimal based on just the infrastructure that we have right now in place. Theoretically, yeah, it's kind of working, but like to the maximum ability of the quality that we're getting on centralized platforms, it's not doing that. So until we're gonna get to that, spot, I think it's gonna be still a struggle.
Yeah, and I agree with that. I think fundamentalists and early adopters are always like, man, when this comes out, it's gonna be awesome. When DEXs hit, it's just going to take over the industry. And what people have found out is just that people want to use an exchange that has the best usability and, best UI and all these things. So, yeah, I agree with you. So we do have some EOS news. We're getting into EOS now. We're about to hit the voice beta launch. But we did have a comment in the comment section that is interesting. And it does, kind of play into debates that we've had, together in what content we're going to bring to you guys at Layer 1 or that are following Layer 1, because basically what D-Steezy's asking is that he's kind of a crypto newbie and where does he start and yada, yada, yada. So, at Layer 1, I think we've always struggled with this tug of war between, we want to bring new users into the crypto space, but we also don't want to make it so basic for those of you that are already following that you kind of get bored. So I do, let's pose a question now. He says, what is the best crypto for a newbie to look into as far as not going bankrupt, but there being a future and investing in it as well? Does that make sense? Haha, I know less about this than my shoe. And I think Barry's already given him some comments. But this kind of draws itself into the bigger, question of where should someone go if they're just getting into crypto? Where is the first place they need to be going to other than Layer 1?
What is that website? I thought it was called Blockheads. But there is a website around education. We've talked to them before, especially in the ICO alert days.
Yeah.
There's Block something. That's a great one. I can't remember the name. We'll get it for you guys and we'll definitely pass it on. I mean, the biggest thing, right, is that I think for those who want to become more involved in crypto, those who want to learn more, is that it just takes time, right? There are so many layers to this stuff. There's computer science and cryptography. There's high level finance that's involved. There's coding and development work, right? You're never going to be able to understand all of those things. I think the biggest thing to do is to kind of focus on one niche, maybe the one that you're most comfortable in. So for me, right, when I got into crypto, I was most interested in kind of the evolution of it as an asset class, right? The more kind of financial aspects of it, as was Dimitri, in the same way that Q, you were really interested in say kind of some of the application level things like dApps or gaming or NFTs, right? So whatever you're kind of most passionate about within crypto, start there, right? There's no real strong reason in my mind to go and try to understand the intense cryptographic levels of Bitcoin if you're just a casual, investor or follower or user or whatever, right? Start with what you care about and expand past there. If you read something about Merkle trees and you're like, what the hell is this? Go do some research on that. But it takes time. Don't feel like you're super far behind, because everybody starts at some point. Everybody's got a different level of education. And you're always learning. I mean, the fun is in the process for sure.
Yeah, I just dropped the link just to the Cointelegraph, that they just have a section of educational section for starting in crypto. But also, it's interesting. I can't believe how much this comes up. Every time I talk to somebody like Uber driver or somebody like about Bitcoin, because I always do that. They're like, well, how much is Bitcoin right now? And I'm like, it's like, 8K or whatever. And they're like, oh man, yeah. So I don't know if I can afford, to invest in Bitcoin because it's 8K. But a lot of people don't know that you can actually buy any amount, right? Like you can buy like $10 worth of Bitcoin. People think that you have to get one Bitcoin, which is a very popular misconception. That's crazy.
Yeah, that's a great point as well.
Yeah, one of the things that I've come across lately is just trying to explain Bitcoin to Americans and to United States citizens, obviously, because we're interacting with them on a day-to-day basis. What I found from people that kind of travel the world and explain these things is that people around the world, especially in like second and third world countries, have an easier time understanding this. because and the quote I use is, it's hard to explain freedom to someone that has it. And that's so true, because people that don't have freedom, it's very easy to kind of explain, hey, this is what you don't have, because they know it, whereas someone that does in the United States, we don't technically need this stuff. It definitely is a added feature, but you could get along just fine in your life without using it up to this point. Now there might be some black swan event like you guys always talk about that happens and kind of puts us all into ruin, which is great to have that hedge of Bitcoin, but on a day-to-day basis, it's much easier to live in the United States, and therefore you don't need to have that knowledge of Bitcoin. But anyway,
key word there is really, I think there's a stability that kind of leads to that freedom, right? If your currency in Venezuela or Zimbabwe or something is literally impacting the way that you purchase basic goods like food or water or clothes, right, or shelter, whatever it is, you have to your point, a much greater appreciation for a stable currency, and obviously Bitcoin hasn't been super stable. So it's a fun process. Just got to roll with it.
It is, and to your point that you were making first, when I got into crypto in 2016 via Mike, he kind of got me in, which is usually how it happens on a person-to-person basis. So go out there and spread cryptocurrency and blockchain to your friends, because that's really how it happens, grassroots. When you guys invited me to that Slack, when it was me, you, Rob, and a couple other guys in that Slack, the first thing I did was go back to the beginning of each thread and just read all of it, and none of it made sense at first. Very rarely any of it made sense, but it's like learning a language, man. And once you kind of put pieces together, then you're kind of getting through, and at that point it just becomes a little bit easier and natural. So I always appreciate you guys bringing me in and into that thread specifically, because that was like the Bible at that point. So
yeah, definitely.
Cool. I hope that answered your questions, DC. That was very long-winded, but it is a topic that we like to touch on. So, all right, we got Voice, the social media platform that's planning to be launched on EOS for the longest time. I believe the announcement in July that happened, I believe it was like early July, they had that whole product quote unquote announcement, not a launch, but an announcement, kind of like in that Apple feel where you had the guys up on stage with the big voice behind them, voice logo. That was in July. And then up till now, we haven't heard much about what's going on with Voice. When is this platform, this social media platform that's going to empower users and get people to keep their data private and monetize their follower base, all of these promises that were made by EOS, we haven't heard much until I believe December 5th was when this announcement came out, and they're planning to launch the Voice Beta on February 14th, so Valentine's Day. Huge news. Again, the whole reasoning behind it was Block 1 June, sorry, not July. But the whole reasoning behind Voice is to empower users. There has been a meme going around that they're going to, based on this beta, maybe it's not based on the beta, but use some of those Block 1 funds to fund a Super Bowl commercial for Voice. There has been a meme going around, but who knows? Anyways, obviously Block 1 wants to tackle social media. Huge undertaking here for them. I'm actually hoping more and more that it gets pushed back. I wasn't, kind of, how can I say this? I'm pretty bearish on a social media app taking over and getting mass adoption for the Block 1 team. And I think anything less than mass adoption is going to be seen as, and I don't know what that definition is, but anything less than that is going to be seen as a failure for what Block 1 was trying to do, which is why I'm pretty bearish.
Yeah, and the next kind of point we have here is on some of the issues that EOS has had. I want to play devil's advocate with you a little bit once we get there, but it's interesting, right? Like I feel like EOS is one of those projects that always gets a ton of traction, a ton of news. It's top 10 by market cap. Voice has been a huge selling point for EOS as we've started to see more and more social media platforms having problems with censorship, whether they're actual humans doing it or algorithms, in the way they're set up doing it. So, I think I think the biggest question for me around voice is what can Block One do with those funds to push voice towards mass adoption, right?
Mhm.
Generally, money talks.
Mhm.
And I think the more that money can talk, the more chance voice has for mass adoption. If it's launched within only crypto, not a chance, right? I mean, it's going to have a few hundred, a few thousand users, just like we see with most other dApps. But those dApps or those blockchain applications that can reach a wider audience with some sort of convenience or selling point are going to be the ones that hopefully translate into some sort of benefit to the underlying blockchain network.
Yeah, absolutely. You remember when Google tried to launch a social platform? Do you guys remember that? I think it was like it's called like Circle or something like that. Yeah, dude. Like they try to do it in a way where it's like exclusive as well, like Facebook. You needed invite only. You know, and it kind of worked a little bit. You know, people trying to like get in, but then they just open up to everybody, and you know, I mean, like, dude, nobody uses it. You know, so it's like even like Google could not compete with like Facebook. You know.
Certainly Google has like attempted many things, and I think their approach is more of a shotgun approach. You can go to that website where it has like all the Google graveyard of all the things that have failed with Google. I think, Mike, to answer your question, they need, and I think will do this, they need to approach it in the same way that I don't think it was DLive. What was the other app? What's the app on Xbox? Mixer. They're going to go about it in that way. They're going to try to get influencers to switch over to these platforms. But just like any network effect, like you need a certain amount of users to make it worthwhile, right? Like and each user you add, the more it compounds. I think I forgot what that principle was. I'm sure Barry knows about it, but that network effect principle. But they're going to try to attract influencers with that money that they do have. And then at that point, it just becomes trying to figure out, how to get users. And one of the things that I think they should do is partner with Brave. We've seen that Brave has a ton of users, and those users are very privacy focused. That's one of the reasons why they moved to that platform to begin with. So if they're privacy focused, this social media's app that Block One is creating is very privacy focused. It's going to pay them in the same way that Brave pays them to watch ads. So you kind of have a lowered barrier there for attracting users to your platform.
Is it expected that Voice will have its own token, or will it use the EOS token? Do you know?
That's a good question. I think if they were actually going for like adoption, it would have to be fiat, right? Like you couldn't like introduce a whole new token. I think there was some play. Barry might know because he's involved with EOS. If you guys do know, please let us know in the comments too. I'm not sure if it's using EOS as a payment method for these influencers or for these users.
Yeah, I mean, that would make sense. We've talked about it before. Well, I guess never. I was going to go on a kind of a staking feed model thought, but EOS doesn't really have much staking, so never mind.
Yeah, the idea here is to, one, have your data secure, and then two, and their best use case here is going to be paying people to and monetize their followers, essentially. So we'll see if it works. I know they said that it'll run on a kind of a conglomerate of the main chain and a bunch of different side chains too. So that's important to note as well.
You know, I think it's going to be such a big, like, if this platform actually like blows up and starts attracting users, it might be, a pretty big experiment in terms of having this decentralized platform, having the ability to monetize your followers, all at the same time keeping your ethics in check. Meaning that, like we've seen on platforms like YouTube where people come out with certain content that is not, good and good ethics, basically, right? And then they get a following, right, of those people that, like that content, that's toxic and so on. It's, it's very bad, and YouTube demonetizes it, right, and closes it down.
Right.
There's some issues where like it was wrongly done, it was where it was rightly done, so it's interesting going to be to see if something like this can occur on Voice, since it can be censored, and you start having these groups that are monetizing followers that are not ethical, and start creating KKK clans themselves.
Yeah, that's so true. And Evan, I don't think Evan's here right now, but maybe he is, and we always have this decentralized talk because he's all about content, right? And he's all about decentralized content. But what you said was absolutely true. When you have decentralized content, people are going to post porn, people are going to post just bad content. Like, you see all these open worlds. What do you see happen? Or let's talk about Pixios's canvas. Right when they posted that Pixios canvas, there were definitely different things. Like, certainly people covered them with their own painting, but when you have something that's just open to the world, the internet especially, they're gonna have something.
And this is kind of I think a perfect transition into a question I want to pose to you right here, and you've obviously been a big EOS supporter. Disclaimer, I own EOS as well, right? I mean, EOS is a top project. I think it gets a lot of unnecessary flack, but at the same time, there have been issues around resource management or all these other things. So
True.
Looking through the lens of Voice, let's say some of these issues do come up, right? I think, as I think about EOS broadly, EOS is starting to suffer and will continue to suffer with the concept of decentralization versus centralization. Now, what I mean by that is that, again, through the lens of Voice, let's say that it does manage to go through and attract a lot of these users, right? Some are within crypto, but let's say the majority are outside of crypto. They want to be able to keep their data private. They want to be able to reward the influencers that are now using Voice. They, maybe at some point they can sell their data or something, right? Here's this new kind of use this to get paid model. But as some of those bad actors come up, whether it's terrorist networks or porn or something like this, I don't foresee Block One taking the decentralized route and basically saying we're going to be I think it's a Gib or Gab. Gab is I think one of the very kind of hands-off social media platforms. I don't see them taking that approach, whereas much of the current EOS community seems in cryptocurrency community seem to have a problem with a more centralized platform. So my question to you is whether it is the resource management issues today, the governance issues for sure apply with the top 21 block producers and kind of that cartel that has occurred. What do you see happening with this kind of decentralization versus centralization battle on EOS? And do you think that one or the other route is a good thing or a bad thing for EOS?
Yeah, Dima, you're going to have to put Mike on the spot because I put you on the spot. He puts me on the spot. So someone's got to put Mike on the spot during the course of these interviews. But to answer you,
yeah,
go ahead.
No, I was just actually answering the question in chat. So
yeah. So to answer your question, Mike, I think EOS is taking the right approach. I know it's not going to sit well with a lot of maxis, but like Barry himself in the chat talking about how EOS is too close to the government, and that they even have their headquarters, situated in Washington D.C. I like the approach, man. I'm very realist in this sense. Maybe it's because I didn't. I'm not a cypherpunk by any means, and I said that like the biggest boomer in the world. But I like their approach, man. I think it's gonna be a spectrum, right? Like you want to have a mixture of centralization and decentralization, and I would even argue with your guys's approach of calling Voice a decentralized platform. I don't think it will be. So, and I don't have any I don't have any reserves about saying that it won't be a centralized platform. I think you need that to be a successful app at this point. Maybe in 10 years we'll have the tech that allows us to do this, and maybe we would have solved governance on a chain. But we're just at this point where it's not feasible to say, okay, we're gonna gain mass adoption and we're gonna be a decentralized platform. There's not a single use case there, and to put besides Bitcoin. Up to this point, I think if you're looking to do an app on the blockchain, it has to have some features of a centralized application, or it's dead on arrival. So
yeah, at least dead from a mass adoption standpoint.
Yeah.
I think, how does Block One use their money to market a decentralized network? I mean, that's always been the biggest disconnect for me.
Which is why they're so close, which is why they're trying to figure it out as they go, and why they're so close in DC. Because if they tried to do this without the oversight, it's almost like they're working in tandem, which I could agree is not a good look for EOS. But they're almost trying to work alongside the government to say, hey, we're trying to create this platform and do it under the pretense of being a decentralized platform, but you guys need to tell us, what are the rules here? Like where can we step over, where can't we, and yada yada yada. So
yeah, I mean,
like a hybrid, like the solution there.
Yeah, it goes back to decentralization as a spectrum, right? It's hybrid. I mean, that's essentially the approach that IDEX is taking. Like we said with their new 2.0, it's not fully decentralized, but aspects of it are. You could argue that Bitcoin is not fully decentralized. There was a tweet that went viral last week or this weekend talking about how over 60% of the hashing power around Bitcoin was on one stage in China, right?
Seems legit.
Yeah, seems right. if those 12 people get wiped out, the hashing power is in complete chaos to some degree. So
yeah.
Anyway, one final topic here that I want to touch on, because this has gotten some popularity, or at least some press within the larger crypto community. This EOS 30-day notice from EarnBet, right? I saw you tweeted out at some folks who were kind of fudding it a little bit. There's an interesting tweet from Suzhou, who's a big kind of hedge fund guy in the space, where he predicts EOS will have some contentious hard forks next year. What's going on with this 30-day notice? Should people care? Obviously it has to do with resource management, but you're in the community. What's kind of the truth behind this?
Yeah, I mean, to address what I tweeted at, it was some other guy on Twitter talking about how EarnBet was leaving because they had to pay, quote unquote, for too much CPU. And that's just wrong, to be just going out there and saying you have to pay for anything. You don't actually have to pay for CPU. What you're doing is renting CPU by staking EOS, right? Like you're not, that's not a sunk cost. Obviously you have the price fluctuation of EOS to deal with, but let's say EOS is at $2. You buy enough, you stake, and then eventually maybe you sell it. I don't know. You don't lose. You're not paying in that sense. You're renting that CPU based on the EOS that you're staking. So it was a fallacy to say that you're actually losing money, and that cost is going up. So that was what I was addressing there. If you guys want to check that out, you can on my Twitter. But anyways, the CPU stuff, this seems like a burned X to me with this EarnBet. It kind of was at the height of the CPU congestion. It was on November 25th. This is when this article came out by EarnBet saying, hey, you've got 30 days to fix this CPU shit, or we're going to leave the network and head to another, which, I don't necessarily have a problem with. If you guys want to move to, Wax, or you guys want to move to Tezos, that's perfectly fine. I think all of this kind of flows back into EOS. I see Tezos and I see Warbly and I see Wax as kind of an extension of EOS rather than a whole new project altogether. So something like EarnBet leaving the main chain to go to one of these, I hate to call them a sister chain, but one of these other chains that have formed out of EOS, I don't see as a bad thing. But basically, EarnBet was saying, hey, we rebranded, we did all these things to gain users, and then this CPU congestion hit with that EOS the contract where they took up a ton of the congestion on the network. It made everything super expensive. We don't now have enough EOS staked to handle the transactions of our users. To which I would say, yeah, that sucks, and I understand that. There was a ton of people that got burned by this. Dapps especially, their users essentially plummeted, which that's their model. Like, you got to take in some revenue from these users. So I understand them going with this, but it just seems like throughout the entire article that it was very like a spurned X type of way to say it. It was a very emotional article. It just seemed like they were just bashing EOS for, and I don't want to say no reason, but it was just way too emotional for me.
Gotcha. Yeah, no, that's good insight for sure. It's obviously kind of an evolving issue or narrative, which will obviously keep you guys posted on as we go.
Yeah, and their biggest issue, and this is why I see them moving to Tezos if they do, is the governance of the blockchain. They feel like there's issues here that could be resolved fairly quickly, and they can get their users back. To which, I would say that is correct. But it's a huge issue, and I think I like Dan's proposal right now. The issue that everyone's having with CPU is that it's a fluctuating price. So it was at this point for EOS Bet to hold thousands of users. Their users didn't increase. It was the price of maintaining the processing for those current users. So it was the price fluctuation that is the problem. So Dan's proposal that we talked about last week would set the supply at 100%, meaning that price fluctuation would not happen, essentially. It would be a constant base.
That seems to be the biggest issue with me around the resource management, is that the actual resources can be traded on an open market. If you use an internet metaphor, I mean, imagine you as someone trying to host a website, right? And your hosting costs change based on people just manipulating the market. I mean, it'd be impossible.
Well, yeah, it's kind of, if like, let's say, if you're trying to use internet and then you have to pay per kilobyte, and if your area is like getting heavy on kilobyte consumption, then your price goes up.
Exactly.
Yeah.
Great analogies.
Back in the day when you had to do that dial up, that's how it was, right? Like you pay per kilobyte download.
Yeah, and the biggest thing, just to kind of tack onto some of the things you said, Q, is that kind of like is that rental model, right? Where on Ethereum, right, you want to send a transaction, there's always some sort of transaction fee, right? Whether it's pennies or dozens of pennies or dollars when congestion is high. It hurts the ability for microtransactions, and when you pay that fee, it's gone, right? You lost it. The fee goes to the miners and the proof of work setup. On EOS, it's not the case, right? If you make an initial investment, right, whether it's $100 or $100,000 worth of EOS, obviously, you would hope that investment can stay the same. When you make that investment, you still have the investment because the EOS tokens you receive come with some sort of resources that allow you to use the network. If you need more resources, you can go and buy more EOS. You can go and buy more resources. But that price fluctuation seems to be the issue here.
And that's what's planning on being fixed. I think altogether we shouldn't have EOS. We talked about this last week, so I don't want to harp on it. But the users shouldn't be subjected to CPU and RAM and net. So hopefully that goes on to EOS Bet. So eventually the fix here is EOS Bet would pay for a certain amount of CPU, a fixed amount, because they know based on the users that they have, this is how much CPU I need. CPU cost a fixed amount, or at least a relatively stable amount. It's not fluctuating every freaking 5 seconds.
Right.
And then they charge their users maybe, hey, for this month you need to, it's 1 EOS for something like that. But
you pull it in from the rake, on the something like that. Yeah. So if you want to hear more, just as a final point here, we had a great interview last week with basically the chief architect at Tezos, Douglas Horn. If you want that kind of devil's advocate approach, he lays it out perfectly as about a lot of those issues. And then one of our first ever episodes with Ash Waro kind of goes into the governance. So either of those two, the Layer1Live from last week, and obviously, like I said, we'll make sure to keep you guys updated as we go.
Yeah, I really appreciate the thoughts that Douglas had. But basically, to wrap a bow on this, EOSBet says if these block producers are unable to institute a comprehensive fix in 30 days, we will be leaving the EOS network. So I honestly think they can just, I hope that EOS network just means the EOS main chain, so they could just go to Tezos instead of, moving to an entire other network entirely. One of the things that, and we have to fly through the rest of these topics, but that Olaf conference speech, maybe it wasn't a conference, but it was a event where he was speaking with a ton of other Polkadot Foundation members. You plug it in there?
Yeah.
Awesome. Okay. One of the other things that Olaf was saying was, and he used a term that I'd never heard before, but it was super interesting, chain acquisitions. I wonder if down the road, Block 1 couldn't purchase these other chains. I know that sounds super centralized. People are going to be...
I was the one who talked about it,
Did
man.
you talk about it?
Yeah.
We had a fantastic late night drunk conversation
I do remember that.
In New York, yeah.
So I wonder if down the line, Block 1 isn't like, okay, Tezos over here, Warbly over here, and, we just like I'll buy the foundation out or something like that. It's a super,
or fund it or whatever,
fund it, something like that. But it's super interesting.
Yeah.
But anyways, that's pretty much it there. We have Tezos and IOST news, and we're pretty much done, fellas. We're at an hour and 34 minutes. So let's fly through Tezos. Let's fly through IOST.
So for Tezos, just really quick, I'm going to talk about the price. As we know, Tezos has been doing real well to the upside. Just recently, like since November 1st, we're up 85% on Tezos price. Wow. And also for the year, Tezos is up right now 250%.
Wow.
So it's actually outperforming Bitcoin because Bitcoin is up 100%, and a lot of people use that as a benchmark when it comes to investing into like crypto. So Tezos price is doing real well. And you can see actually in the volume reflecting that as well. So the buy volume is big there. It's not just, green candles that you see. And we know, like I've talked about many times on Dimitri's desk, that volume dictates the price. So, Tezos is looking great. Right now we're sitting at the fairly high price, but I'm sure we can see, probably Tezos advance higher once we have a small pullback.
Yeah, it's an interesting spot. I mean, obviously, for those of you following along live or listening, as you've heard, on disclaimers or seen on disclaimers, none of this is investment advice, right? So we're just we're talking about this because the Tezos has been a hot topic because of this price pump, especially on crypto Twitter. I mean, it's for me, it's moving into the kind of the shill stage, right, where people have bought a lot of it and are now basically saying that it's going to forever outperform Bitcoin and every other asset. But they from a fundamental standpoint, they seem to be doing everything right. There's not really anything I can point to on Tezos that says, hey, this is a massive issue. They have tons of funds. They have over $300 million worth in the Tezos Foundation to deploy on bringing applications or partners or whatever over to Tezos. They've basically been the only people keeping security tokens alive,
right?
With some major partnerships with giant banks out of Brazil and otherwise. And they're, at the core, their self-amending protocol has basically gone off without a hitch over the last year. So,
knock on wood,
Yeah, knock on wood. It seems to be well-deserved for Tezos. And as we've talked about previously on Layer1Live, and I'm sure you've talked about a little bit on Dimitri's desk, which you can see tomorrow, right?
At 5 p.m. Eastern.
5 p.m. Shout out Dimitri's desk. It's been kind of this safe haven asset as Bitcoin has continued to decline. I mean, it's been going up as Bitcoin has been going down.
Yeah.
So it's at an interesting spot. Like we said, just wanted to touch on that. I mean, right now, if you look at Coin Market Cap, it's basically trying to break into the top 10. So it's you got Bitcoin, ETH, XRP, Tether, Bitcoin Cash,
Flippening.
Litecoin, EOS, Binance Coin.
The new flippening.
Yeah.
Good old Bitcoin SV at number 9.
Is it going to take over Stellar?
Yeah, Stellar's at 10 and Tezos is at 11 with about, only about $70 million worth of market cap in between them. So Tezos hitting top 10 everybody on crypto Twitter is yelling BNB, we're coming for you.
It's
EOS, we're coming for you.
It's time to cut the supply, Stella.
Yeah, cancel the airdrop.
Yeah.
Right.
Hey, so we've got a ton of comments in the comment section here.
Nice.
A lot of it was on EOS, so I won't touch too much on it, but there was like a debate in the chat on the EOS ecosystem versus Ethereum and how decentralized it all is. Shimbob is talking about synthetics. Barry's talking about Tezos, and he said he sent the Tezos interview to people. It was great. It covered EOS and everything else, so appreciate that.
Nice.
And then Metanix is over here talking about dumping IOST and buying Tezos. Of course, it's a joke. And D. Steezy says, info overload. So we obviously have a crypto newbie here in our midst with D. Steezy. So, check out the interview afterwards in the description. I'll timestamp everything. So if a lot of it doesn't make sense and maybe you just want to come afterwards, although I don't want to lose you on the live version, but come back afterwards. It'll be timestamped for you, and then you can go to just topics you might understand. But that'll help. Otherwise, just keep listening, man. It's like learning a language. But
yeah, you play basketball with better players, you're gonna get at some point you're gonna get better, right? That's the that's what I was always told. Never, I got a little bit better at basketball, but
yeah. I've never played basketball. Dude, Soviet Union would not have basketball.
Yeah. Anyway,
gotcha. All right, yeah, we've got IOST news, which pretty big application came to the platform recently. It's called Fish and Chips, and I'm glad Metanix is here in the chat because it's a fairly controversial is not the word. It's a fairly hard process to understand. If you guys remember, Liebi Pool had that process, and I think Metanix also has this process. So where if you vote for their node, you get a token, a native token in return, and that's kind of how this Fish and Chips works. It's a node on the IOST network, and Metanix, jump in anytime to help correct me here. But basically, you're locking, and this is one of the features that's interesting. You're locking IOST into what's called Fish, and Fish can never be unlocked. It's basically like you're voting for this node in perpetuity. And after that, you would get dividend in chips. So, for example, let me read this out. Fish and Chips is a self-compounding virtual deposit contract using a two-token economic structure, where Fish token are lifetime locked IOST in our immutable IOST smart contract, establishing a starting $12 million IOST floor. This allows for a perpetual serving node on the IOST blockchain with no worries of ever dropping below the requirement to maintain block producing status. Otherwise, the IOST team could move that 12 million as we've seen before. But chips is our liquidity model, so they receive chips, and chips can be traded on open market on the IOST DEX and things like that. So it's a lot like the Liebi Pool, where you get that VOS token in return for staking to their node. There's also another kind of umbrella here called Fish. I know these token economic models are super hard to understand when you kind of put it together. You need to look into it to kind of get the full view here. But Fish is kind of the dividend model of what would be. So Fish is the umbrella, and then the divs are received if you hold Fish, and they think of it as like a suite of DeFi apps, Fish and Chips being one of them. So if you have 5 DeFi apps, they're all taking in some type of fee, obviously, and we can go through the fee model here. The person holding the Fry token would receive dividends from the fees of all the apps combined. Does that make sense?
I think so, yeah. I mean, broadly, essentially, what Fish and Chips is doing is guaranteeing their spot as a node, right? So essentially on the IOST blockchain, there's a minimum amount of IOST that you have to have staked to your node, whether you own them or not, in order to operate a block producer. When you operate that block producer, you receive basically a return every year for producing validating blocks, right? So to your point, Q, people can so if I lock up my IOST to Guppy's Fish kind of umbrella, I can never pull that IOST back out.
Yeah.
It's like perma-locked.
That's kind of
I'm almost positive it is, but the idea here is that you receive like a pretty strong APR that would handle itself fairly quickly in the long term.
Yeah, it seems like I like Barry's comments here about this, but it's interesting the way they have it set up, because what he said here is that, well, what if you don't agree with the way the node is carrying themselves, so you can't reshuffle your votes, right? You kind of locked in that. But also the second part is like, you're gonna get the chips, but like the chips are going to be open on an open market. What's going to be the pricing on that? The APR is there, but you get in your APR in chips, right? So if chips is you're not getting APR IOST. So
it's interesting, and this is why I kind of wanted to have Metnix kind of go through this. But I believe chips can be refunded in IOST like immediately.
Oh, okay. So if there's a reverse, I guess, of it. But,
then it could work. Yeah, and we'll keep looking into this, obviously. But I mean, it's kind of the classic model of, hey, here is this blockchain ecosystem. Mm-hmm. We're going to create some benefit for ourselves with this new token, which then hopefully theoretically will give you as the staker more benefit than you would get from staking for another node, right? So the risk in doing this is obviously, let's say the fish and chips ecosystem does not pan out, right? Then you lose, there's some risk in losing out on some return and not having sold IOST at a certain price. But I would imagine too, just to finish here, Q, I would imagine too that there's probably some benefit for those who are getting into the system first. Like that might make sense.
Yeah, because you're receiving more dividends over time. So everyone has to pay this 11% fee, right? It says when you purchase chips from the contracts built into the exchange, there's an 11% fee, and on buys, 6% dividends to all fish and chip holders, 3% referral fee, 1% development fee. So it's all going to, and then 1% to the Fry investment fund. That's those holders that are holding the Fry umbrella coin. So Fry is the core to all decentralized applications designed and created by Guppies. Fish and Chips is one of the several Guppies.io dApps. For each dApp created by Guppies, holders of the Fry will earn dividends either directly or through the Fry investment fund. So,
got it.
Yes, certainly, like, again, a very convoluted process as we talk about token economic models that, get APR back for their users. Certainly, they're basing this on the Metnix token as well as the VOS token. They're seeing how other people are working. So I think Metnix just commented, Lieba Pool gives you VOS in place of IOST, but you must trust VOS is always redeemable by the smart contract. The idea is you can use VOS instead of IOST for dApps in the meantime. So, okay, so you're kind of like having IOST as collateral. Okay, I mean, yeah. We'll move on from this guy. You got anything?
No, I was just going to say, it seems to me like generally the benefit that you receive in these setups on specifically on IOST is that liquidity.
Yep.
Right. So, yeah. So anyway, I mean, all in all, good to see some DeFi happening on IOST. I know we've talked about it a lot before. Yeah. DeFi has been a huge niche this year. And if you look at the numbers around Fish and Chips, it continues to grow. So shout out the Guppies team there. One final point on IOST, right? So again, the company behind Layer 1 Settler Ventures is a top node on IOST. We're always going to keep IOST at top of mind. They're a growing project in Asia, especially Japan. Japan has been a focus if you've been following along. Had a great Q4 node conference, it looks like, out in Japan there. Same thing happened in Africa. IOST Africa held a Q4 node conference as well with over 40 people attending. So yeah, you kind of see this interesting growth around IOST where, the foundation, the IOST team has stated and both in their words and their actions, their focus is now pretty much fully on enterprise and government partnerships, right? I think IOST and EOS are similar in that sense, in that they're, some aspects of it are moving towards kind of the centralized opportunities that exist, say Chinese governments, right? Chinese enterprise solutions, while other parts of the actual ecosystem continue to, expand and kind of decentralize, right? Whether it's ecosystems in Japan growing or Africa. Obviously, we're working through the IOST Global Alliance to help grow Western, English speaking, that kind of general ecosystem. But yeah, that's, pretty much the update on IOST.
Absolutely. And there's been a lot of pickup in talk within the IGA. Super interested in all the kind of ideas that are coming out of there recently. So shout out to all the guys in the IGA with us. I think some type of DAO situation, although IGA could technically be a DAO, but all the infrastructure that we see on other chains with their DAOs, we could possibly get to one day, but it's definitely been cool to see the growth of IGA. But that's pretty much it, guys. I appreciate you, staying through the whole live stream. Everyone that's jumped in, thanks for the likes. Also, shout out to the guy who disliked our video. You are the man. I appreciate you. Hopefully, we can convert you later. But yeah, that's pretty much it. If you guys want to hear about other news that we may not have touched on, please leave it in the comments. We'll hit it next time. We got, I believe, Kava Labs on the Layer 1 podcast this week as far as our interview. So yeah, that's pretty much it, guys. You got anything before we head off?
I don't think so. Just as a recap, right? Layer1Lives are always on Monday. We're gonna try and do another episode later in the week, maybe on like a Thursday. But Layer1Lives are Monday. You can catch us live, obviously on YouTube, or after the fact, I'd say on your ride home from work. Where basically all podcasts are held. Tuesdays, my man Dimitri on Dimitri's desk, usually hitting that about 5:30. Kind of depends on when that coffee kicks in. But Wednesdays, Thursdays, we try to post an interview with a top, CEO or member of a top blockchain network. And then like I said, hopefully we hit another Dimitri's desk or Layer1Live later in that week. So content is coming. Don't forget, like, subscribe, continue to comment, try to win $250 worth of Bitcoin at the beginning of next year.
Yeah. You pretty much said it all. So I'll see you guys tomorrow at 5 p.m. or 5:30, Dimitri's desk. And I'm exploring to do this twice a week because I can't wait to share my mind about what's going on in the market.
Yeah. Can we get a teaser for tomorrow? Is there anything kind of at top of mind?
Oh, yeah. Well, see, it kind of bases off my last episode where the title was "Don't Get Chopped in This Market." So we're going to recap that and see how this choppy market continues to deliver.
Everybody got chopped last night, right?
Oh, dude. Yeah. All these wicks that's been happening. Definitely going to go over that. It's pretty exciting. Hopefully we'll see some good volatility soon. Directional move rather than sideways.
Any traders out there? My man's been hitting it, pretty much spot on. So if you need, knock on wood, if you need some help,
non-financial advice,
of course.
Mike's trying to set you up, dude.
Yeah.
some help with understanding charts, not necessarily trading, is what I was getting at. But yeah, not financial advice.
Yeah, thanks, guys. As always, you guys have been awesome up to this point. We're looking to continue as this year ends and the new year begins. You guys have been awesome. Continue leaving the comments. Continue sharing Layer 1. We're planning on getting a website out here pretty shortly. Hopefully we can get some apparel as well. If you guys are interested, as always, leave comments. Let us know how we can get better. But otherwise, thanks.